all things told, yes, it was messy. Yes, mistakes were made, but it could have been way, way, way worse.
So we go to lunch and Shane turned up and he was there for like an hour and just is just an insane person. Like even by crypto standards, like his level of like reality distortion field that he lives in is like insane. And so then he left and all of my friends were like, that guy is insane. Like completely insane. I'm like, I know, that's why I love him.
I realized that the majority of venture investors are really just retail with a large check size. Like a lot of you guys are not the brightest. So, maybe it did just get away from everybody. And that's like one of those areas in there's probably one of those stipulations, like first right to refusal. It's probably one of those things you have a conversation on and one VC is talking to one guy and they're just like, yeah, screw that. He's leading.
Hey everyone, I'm Kain Warwick and welcome to the third episode of Uneasy Money, because what happens on chain never stays on chain. I'm here with Luca, Netz, CEO of Pudgy Penguins, and Taylor Monahan, security at MetaMask. Here's a reward from our sponsors that make the show possible.
Are you a builder who needs to add on-chain trading to your product? The Uniswap Trading API from Uniswap Labs offers plug-and-play access to some of the deepest liquidity in crypto. It's on-chain execution at an enterprise level. More liquidity, less complexity. Visit hub.uniswap.org to learn more.
One quick thing before we start, nothing you hear on Uneasy Money is financial advice. We're just three builders talking about what's happening on chain, and we want you to always do your own research before aping in. You can find all our disclosures at unchaincrypto.com/uneasymoney. All right, guys, episode 3. Let's get into it. It's been a busy week as it tends to always be. How are you guys doing?
Pretty good. It's pretty fun week.
Yeah, it feels like there's a lot of stuff going on. So first thing we're going to talk about is Monad. Monad hit mainnet. So Monad is a chain that has been around for a long time now, almost 4 years, and just got to mainnet. So it was probably one of the longer pre-mainnet chains that we've seen historically. It's kind of wild to think about the fact that Ethereum was like maybe a year, 18 months before the Genesis block between like the ICO, like I think not even 18 months between the ICO and the Genesis block. And the first 4 years of Ethereum history was like insane, the amount of stuff that happened. But yeah, Monad finally went live. The interesting thing is Monad did a ICO through Coinbase's new platform. And the token dipped a little bit, but I think it's over 4 cents, which is I think an implied FDV of 4 billion. But there's not a huge circulating supply. It's only about 10%. I think Luca, you're probably scratching your head at that one. What was the circulating supply of Pengu when you guys went live?
Like 70%. Yeah.
Different time a year ago. So yeah, I think it seems like it's been a pretty good launch so far. There have been a ton of different platforms that have supported the chain. I know you guys are supporting them on day one, right, Tay?
We did. Yeah. I'm very proud of our team. I don't think people realize like MetaMask has been around for so long. We also have like a huge amount of tech debt and things happening. And yeah, we shipped Monad support on day one, and I'm super proud of us for doing so. We also have we have a new network page that actually wild, right? It links you to the things that you can do on chain. Who'd have ever thought? But yeah, I'm pretty happy with it. And the team is obviously really happy with it, but I'm just mostly impressed that we
shipped it on day one. Yeah.
We shipped it on day one. And we also philosophically we go back
just
and forth.
For context, right? You shipped Solana on day 1000 or something like that, like day 3800. So it's definitely an improvement.
Yeah,
Definitely, definitely
exactly.
improvement. Yeah, so I'm sure you've got some thoughts on this, Luca, but like the meta of launching a new chain, right? For I think a long time was like go out to all of the DeFi projects, um, you know, pay them a grant or something, or if they wouldn't do it, find some crack 20-year-old to fork it and just YOLO deploy it. And so Monad has really leaned into that with the combination of like DeFi and meme coins. What are your thoughts on that launch strategy?
Yeah, I think it's yeah, I can't really speak to it just yet because I don't think there was that many big meme coins on the chain just yet. I think the DeFi stuff I played around with, but naturally the ecosystems have to be relatively holistic. I think nowadays, or at least most people think. I have a contrarian take. I think people should be more purpose driven, meaning like go after a specific function, whether that function is like, I'm not actually a general purpose believer, but I think all in all, give credit where credit is due. They executed well. Obviously they didn't have the Binance listing, which I thought was interesting. But tokens at the end of the day, there's plenty of chains that have nothing going for them, that tokens go up and community rallies behind it. And I don't actually like that side of this part of crypto, but it is just the unfortunate reality. And it's a reality that, at the end of the day, if you have bag holders and people are making money, then they're bullish and you're doing a great job and you're an amazing builder and the integrity of everything you've built is so amazing. And they don't really look at anything else under the hood.
So just maybe let's talk about Binance for a second, right? Like this has to be one of the biggest launches in years that Binance hasn't listed very quickly, except for Hype. Probably like Hype and Mon are the two that I can think of in recent memory where it was like a huge Hype launch and Binance has faded it. Seems weird. I don't know what's going on there.
Does that have to do with the Coinbase? The fact that they were like the big Coinbase thing? Because like historically, you have Binance, you have the listing, you have Alpha, you have all these different incentives and reward programs, but historically also Coinbase doesn't have any of that, right?
Yeah, exactly.
So
exactly.
was that a factor in this?
I
I don't know.
I don't know, but I think there's been obviously a lot of discussion about Binance, the cost of listing on Binance, the cost of listing on all exchanges, right? There is an expectation that Binance gets a pound of flesh from projects, one way or another, right, for listing, which like my hot take is like markets are markets, right? If someone has a useful service, i.e., a bunch of degens that are sitting on their platform, I don't have really an issue with people paying for it. I know that there's been like a lot of debate about this. There was a bit of kind of contention on the timeline between Coinbase and Binance about listing should be free versus listing should be paid. Yeah. I mean, you've been through this process. Like, I don't know, if you build a big business, it feels like weird that you'd be like, no, let me give that thing away, right? The problem, I think, there's a whole bunch of things that get tied up in this, right? Like if you monetize your ability to put a token in front of all of your users, that can get dark very quickly, right? Where it becomes about extracting versus but on the basis that you are genuinely filtering out bad projects and only allowing good projects to come on the platform, then I don't really see an issue with charging a fee for that. It's just that it drags in all of this stuff around, like who gets the fee, where does it go, what is it for, what are we doing, but like exchange fees and listing fees, it's hard to see a way of getting around it. I mean, of course, someone can just come, like Coinbase can go, well, it's $0 to list on Coinbase, and if there is a large market participant that crushes the margins on something, then maybe the price goes to zero. I don't know. I don't know if that's something that we see as sustainable over the long term.
I mean, what's the, like, I don't know. I think the conversation on the timeline about the listing fee specifically was like slightly disingenuous because it's portraying the
No,
entire.
you're saying the timeline was disingenuous. You're saying there was a psyop going on? I don't believe it. That's crazy.
Because, like, I don't know. The whole thing was like just put in this pretty little package of like this listing fee, where in reality, I think it's pretty rarely the case where it's like just such a simple situation and such a simple deal. Like, give me X dollars and we'll list you. Like, that's not what's actually happening. There's all these different things going on. And, you know, how those are packaged up and what they're called and what the money is and what the team gets value out of, what the end users get value out of, what the exchange gets a value out of. I just think the conversation is usually like very
it's
very
black and white, right? It gets reduced down. And I mean, you know, talk Binance, right? Binance has like 4 or 5 different programs that a project can go through, right? And you know, one of them is basically turning the token into yield for BNB holders. Right?
Exactly.
Which, like, I sit here and go, that's the job of Binance, make BNB go up. Right? Yeah. Like, that is literally their sole job. So if they're saying, hey, you know, I mean, there's on-chain examples of this. Like Aerodrome is a really good example of this. Like, take everyone's token, you know, add liquidity, but then inject it into the Aerodrome token effectively, right? Sell everyone's token and put money into the Aerodrome price, right? Yeah, I don't know that I like see a huge issue with that. Of course, no one's got a gun to anyone's head saying you have to list on Binance. But the interesting thing about this is you have to imagine that Monad has been like, whatever, which you didn't used to be able to get away with. You couldn't say no to Binance.
Yeah.
So,
yeah. Well, and at some point, Binance users are going to be like, wait, what the heck, guys?
Yeah.
Right?
I mean, it's
like,
yeah. Like, how do we not have Mon, right? Especially if it goes up. Well, this is the other thing, right? If the token goes up from here and they're like, wait a second, you didn't give us this token when it was, you know, 20 cents. It's now $2. You have prevented us from having generational wealth. Like, that's literally going to be the conversation, right? So, so, you know, but also there is something interesting about the dynamics of this, where, you know, this is one of the few tokens that we've seen, maybe excluding hype, where, like, at least in the first 24, 48 hours, it hasn't been a down only chart. So there's something interesting about that as well, I think.
Yeah, there is.
And his drunk trading experience, I think in hindsight that was pretty obvious. Keon wasn't going to let that thing go out of the gates and stink up the joint. Yeah. In hindsight, like, that was probably an easy trade. I did, you know, try to max fill on Coinbase. It seemed at least relatively somewhat free. Yeah. But they didn't fill you. They basically, what they did is they basically put like the ceiling almost at $50,000 and try to give as many people $50,000 worth, because I max submitted for $500,000, and then, you know, my friend a bunch of friends who only submitted 50 to 100 grand all got 50 pretty much.
Interesting. Oh, that's interesting.
Barometer. Yeah, so they were maxing. So there wasn't any like big. It was actually a good strategy though. So like not one big person, or there wasn't like a constituents of like dumpers, like big whales. Yeah,
that bottom up fill structure, right? The way that they did it is they kind of did this round robin fill everyone from the bottom up. So, you know, everyone who bid up to 50K got their full allocation, which is interesting compared to MegaETH, right? Where they were like, hey, you know, picking and choosing. I think with us, we've said we're going to do a lottery. There's no real good, you know, every single solution has trade-offs, right? Like, someone's going to be unhappy. You know, the person who wins the lottery is like, this is the best system ever invented, right? And then people who lose the lottery are like, this is the worst. This is you know, war crime, basically. So,
but I mean, but with these, right? There's different things that you want. One of them is distribution. Like, you want the most amount of people to have it, but you also want those people to actually presumably care about it and use it and not dump it and stuff like that. right?
Yeah.
So it's like you can weigh those trade-offs based on the larger sort of long-term goals of what you're doing. I don't know. I have some amount of respect for Monad. Again, just going back to like last week, what we were talking about, where they just seemed completely unfazed by the fact that it hadn't sold out on Coinbase. And like, it just, to me, points to them being confident in their long-term goals. And like, that's something that we don't see a lot of in this space.
Long-term goals or confidence? I think we see confidence. We just don't see long-term goals.
Oh.
So, Luca, did you have anything else to add there?
No. I was gonna say, to be frank, I actually like their approach a lot, because I was a little upset for like a minute that I didn't get filled for the full amount or close to it. But if you think about it, if you try to weigh all the different options, the bottom up option is actually a good way to like make, everyone's kind of happy. Like everyone has a meaningful amount of, allocation where, like I was mad for literally 30 seconds and then I was like happy. Right. So, it's actually not a bad one, because, what you really want to optimize for in scenarios like this is maximum happiness amongst the most amount of people, right? Like that would be your objective, right? As much good vibes and goodwill across as many individuals. This probably fit that, if I'm being frank. I don't think many people were upset. I didn't see.
Yeah, I think it does require having a lot of allocation, though, right? Like if it's they raised 200 mil, right? So it requires having a high enough FDV and a large enough percentage. If you were doing if they had done like a 500 mil sale, right, you would have had a ton of people. It would have been massively oversubscribed, and everyone would have gotten filled for like $2,000, and then everyone would be unhappy, right? So there's like, it's hard to know, exactly how it's going to play out before. But I think to your point, Tay, like they're confident. They're like, no, that's fine. We're going to do 2.5 bill. It's going to be cheap.
Yeah.
And everyone was like, this is so expensive. And they're like, it's not.
It's just a different vibe. Like, I'm sorry. Like everyone else is on, but should we talk about MegaETH though?
Yeah, let's talk about MegaETH.
Because that's a different vibe right now.
This is a different vibe. Look, so MegaETH had a TVL campaign to kick off the chain, because their chain launches in like a week, I think, right? So they have a deal with Athena. We talked about Athena last week, the stablecoin issuer that does this kind of basis trade where you get a bunch of yield for holding the stablecoin. They've gone out to networks now and said, we will give you a white labeled version of Athena, effectively, that you can run on your chain. And so for MegaETH, it's USDM. And so MegaETH was like, okay, let's go. Let's get some TVL on this chain and get the party started. And it was a bit of a mess, unfortunately. So there were two fairly unfortunate things, I guess. The first one was that they were a bit delayed, which is like classic crypto, right? Like, who hasn't tried to launch something and been 3 hours delayed when they try to actually ship it? And yeah, so then the second thing was, they did all this stuff. It started going. They started filling it up. And then Gnosis Safe strikes again. People do not know how to use Gnosis Safe. And they staged a transaction without realizing that once you stage a transaction, anyone can execute it. And so they had this executable transaction that was sitting there to bump up the cap on this TVL campaign. And some smart, enterprising young autist who was watching the chain was like, wait a second, I'm just going to execute this transaction. And then the cap was raised, and then people were depositing again, and then it got up to like 400, and then they paused it. So just all around kind of crazy stuff, a bunch of crazy things in a row.
Yeah, it just like and it just reminds me of like 2017 era, where it's just like this series of things that just keeps like falling onto one another. And it just sucks. Like, it sucks for the team, it sucks for the people, it's a mess, it's not a good look, it's not a good vibe.
I think,
on the plus side, Yeah.
Scrambling in crypto is never good. As soon as you start scrambling, like pencils down, stop everything, and like go back to first principles and figure out what you're doing. Like in crypto, being like, all right, here's the solution. Let's just quickly stage a transaction on our Gnosis safe is not the answer.
Yep.
That's never a good answer.
It's a good piece of advice. I actually like that. No,
Yeah.
if you catch yourself scrambling, take a sec.
Never scramble in crypto.
I scrambled before.
It just gets worse, right? Like it's like, oh shit. And there's so many foot guns in crypto. Like there's so many things where you're like,
I'm sure it's fine if we stage this transaction, so it'll just be a bit quicker when we want to do the execution, and then unintended consequences. I think the good thing is I actually spoke with Namek yesterday. They've got a bit of a plan that they're putting together, and they might have already announced this to kind of try and make good with the community. This is one of the other challenges, right? You're trying to launch a chain. I'm sure, Luca, you get this. You're trying to launch a chain, and then you're like, okay, we're launching a chain, but we have to do this campaign. So you like send like 2 or 3 people off on this like little side quest, right, to go and like launch the campaign. And you're like, I'm sure this will be fine. People have done TVL campaigns a million times. And then they never come back. And you're like, what happened? And like they've been massacred out in like the wilderness somewhere. And you're like, oh, okay. Next time we'll put a little bit more thought into that side quest.
That's such an accurate description of like crypto in general.
Their
Like,
bodies are like
lose.
torn to shreds, and you're like, oh,
like, wait, what
man.
happened?
Where
like,
are
we didn't foresee
dudes?
that.
What happened to the dudes we sent on that side quest? They never came back.
Yeah, no, exactly. I like the advice, don't scramble. I also want to point out, it could have been way worse. Like, all things told, yes, it was messy. Yes, mistakes were made, but it could have been way, way, way worse. And I think, at the end of the day, we should just take a moment to appreciate, like, no one got completely hacked. No one got completely wrecked. It was just a little bit messy, as crypto tends to be. So, blessings.
Yeah, exactly. Yeah, I think take the win, which is no one lost money. People are just a bit annoyed and a little bit of wasted time. So Polymarket. We've talked about Polymarket a few times the last few weeks. They finally had this CFTC green light for a relaunch in the US. I should say I'm a Polymarket seed investor, so I'm a big fan of Polymarket and Shane, and I've been following this journey.
I think it was like, call it 8 figures, low 8 figures, something like that.
Beef wet, dude. Holy moly.
Yeah, well, so it is interesting, right? So I've got a funny story about Shane. So I want to say it was like 2020. It was ECC in Paris, and I was like, "Hey, Shane, I'm having like a lunch with a bunch of friends. Like, come." These are crypto people, like OG crypto people, so all completely insane. Like every single one of them completely insane. And I was like, hey, Shane, come and meet some of my other friends. Like, I'm sure they'll be super interested in what's going on with Polymarket, whatever. So we go to lunch and Shane turned up and he was there for like an hour and he is just an insane person. Like even by crypto standards, like his level of like reality distortion field that he lives in is like insane. And so then he left. And all of my friends were like, that guy is insane, like completely insane. I'm like, I know, that's why I love him. He just does not care. He's going to get the job done. Doesn't matter what anyone throws at him. Like, this is a guy that the FBI raided his house, and an hour later he tweets, new phone, who dis? Like, just like levels of like not giving a fuck that are insane. So I'm very happy to see that the CFTC that came after Polymarket like 4 years ago has capitulated and said, actually, this is fine. You guys can do whatever you want.
Yeah, 100%, as they should, because this is.
I mean, it's probably going to go down as the greatest use one of crypto's greatest cases and innovations, right? I mean, it has to be the prediction market. You know, it's like there's some good narratives around that it's going to replace the financial infrastructure. I mean, who knows? But I mean, it's hard to say that like without crypto rails, prediction markets wouldn't be possible. And it is completely changing the paradigm of the world. And he was one of the pioneers, if not the pioneer. I mean, Joey Krug won. And the Kalshi guys, those Kalshi guys maybe deserve a little more credit than they get because they've been around a lot longer than I think people think. Though it does feel like they're just like totally grifting or on top of Polymarket's hype, or at least like the whole marketing beef is just so lame and loser-esque. But nonetheless, like those guys here.
No comment on that one. No, I'm not touching that one.
Okay. Those guys deserve some credit though, right? Because they've been around a while. So, you know, kudos to them. But I mean, wow, what a fumble. I mean, I remember looking at that. I wish I just really understood. I think I was buying the whole political Kool-Aid. I don't know why I was being so naive, but it just hit me like a couple months ago. I was like, holy shit, wait, this business is going to disrupt all the businesses, right? There's like 8 businesses where that thing disrupts, and the TAM is, it might sound insane, but it's trillions. I mean, it is. So I mean, geez, what a fumble. I wish I would have got in at any point.
Well, you know,
maybe we can speak to this as well, right? This is an interesting dynamic, and this kind of was surprising to me. Most of the investments that we do at Bodhi are like token warrants, right? Like we do equity, but usually it's the token warrants or like SAFs, like literally like direct token deals. So for context, there's a whole bunch of ways that you can invest in a company. You can just invest in equity and hope that at some point something happens, right? That the equity is worth money, there's a buyout or something like that. You can invest in equity and then get warrants for future tokens. So if a token launches, you pay like a nominal amount of money and you get the token when it launches. Or you can do a SAFT, which is this like call it a crypto capital formation innovation, where it's a simple agreement for future tokens. And it just basically says, all I want is the tokens, bro. Like, just put the tokens in a bag. I don't want equity. I don't want any other nonsense. Just like, tell me when the token is launching. The interesting thing is when you do a SAFT, typically the tokenomics are already kind of locked down to some extent, right? So you know how many tokens you're going to get. There's usually no dilution, right? Like it's a percentage of the network, the future network that you're going to get. Whereas with equity, there is dilution. People issue more shares, right? So when in 2020 when we invested in Polymarket, there were, let's call it 100,000 shares, right? Then they did a round, and then there was like 150,000 shares. Then they did another round, there's 200,000, and another, and another, and another. And they did, I think, maybe 4 or 5 rounds between the seed and where they are today. And so the dilution is actually like pretty high, like 75% or something like that, versus a SAFT where it's like, I get 1% of the tokens and it doesn't matter what happens between now and then. So yeah, equity deals versus SAFs, definitely different outcomes. Still a good outcome, but like very different outcome.
It's still great. It's still going to be great, dude. I mean, that thing is going 50 bill plus. Now every token's going 50 bill, whatever it is.
I just want the tokens. I've been waiting for this token for.
Just give me the tokens. Put them in the bag.
He's got a double dip. I mean, he's a business that has to double dip. And when I say double dip, I mean like, Telegram it, or you got to do the token and you got to do the stock. There's no way you're not double dipping.
Yeah, 100%. I think it's a good one as well, right? Because there's different audience. There's like crypto degens using Polymarket that want the token, and then there's like TradFi that's like, help us figure out what the prices of things are. So very, very different audiences. All right. So in a moment, we're going to talk about Klarna's stablecoin launch, but first, a quick word from the sponsors who make this show possible.
Hey, founders and developers. If you're looking to bring on-chain trading to your product, wallet, or platform, Check out the new Uniswap Trading API from Uniswap Labs. It's your plug-and-play gateway to global on-chain liquidity. No deep crypto experience required, and no need to manage complex integrations or ongoing maintenance. With the Uniswap Trading API, you'll get enterprise-grade on-chain execution, combining both on-chain and off-chain sources for the most competitive prices. Simply put, more liquidity, less complexity. And this isn't just any API. It connects directly to the Uniswap protocol, which has securely processed over $3.3 trillion in total volume with 0 hacks. So stop worrying about liquidity infrastructure and focus on building your product. Get access to the same liquidity that powers billions in swaps through one powerful API. Visit hub.uniswap.org to learn more.
All right, Klarna. So Klarna, which is a fintech company, we won't troll them too much for that, but they're getting into stablecoins, so we'll give them a little bit of credit. I think the founder of Klarna once was like, crypto was a scam or something like that, and now he's like, actually, stablecoins are pretty good. So we're getting there slowly. So they have launched a USD-backed stablecoin. RWA-backed stablecoin. There's a bunch of people involved. So Bridge, Stripe, Paradigm's Tempo blockchain is where it's going to be launched. Probably the most interesting thing to me that I am struggling to get my head around, and maybe one of you guys knows, is they're launching it on Tempo's testnet. Are we launching stablecoins on testnets now? Like, what? Yeah? It's fine. You just launch it on a testnet. Who cares? Like, I don't know. It feels weird. Why? Like, we have so many networks. Why are we launching on a testnet? I don't get it.
I mean, it feels like what Consensus grew up doing, which was these big, huge things with big traditional companies, right? That were on not Ethereum. On a side chain or partially on Ethereum, or it was like, a little experiment that was on Ethereum that was going to be huge or whatever. And well, I think we all know how those worked out.
Can you give us an example of one of those?
I mean, what we had, there was like a JP Morgan one, right?
Yep.
There was also early days Consensus. There were so many different little initiatives, right? Because this was like when the world was waking up to blockchain as the technology, not as like the ICO, not as the coin, but as this like global distributed ledger.
Blockchain,
and so
that whole arc.
Yeah, exactly. In the same way that like in a lot of ways companies are doing with AI, right? Companies are like, how do we use AI to improve our business? The same thing was happening back then with the blockchain. And some of these things are worthwhile experiments because you learn a lot of things and you grow from them. Some of them are just, a lot of people like try to patch on something to their existing business. And then at some point everyone looks around and goes like, wait, why are we doing this? My question for we're obviously the industry on the whole is in a different position today than it was back then. But we're talking about Klarna, we're talking about Stripe, we're talking about Tempo testnet, right? What's the trajectory of this, like, realistically, right? Are they going to bring all of Klarna's everything on chain? Like, what exactly is the goal, and how does this improve their traditional business? What does it unlock? Those are the questions that I always had.
Adds more yield to more customers in probably different regions that they probably couldn't access. But the Klarna business, I never understood it. I don't understand most fintech businesses. Klarna's 20% defaults right now, right? So 20% of all the money that they're loaning out is defaulting. That's good. That's good for crypto. I must feel like those are some good numbers to bring across the crypto side. Well, and it's publicly traded, so maybe it's a narrative thing, and they're just trying to insert themselves in the stablecoin narrative and distract people from the 20% defaults. I just don't know how a business can sustain when you're basically giving away 20% of all of your revenue. It's basically just defaulting, right? The buy now, pay later never made any sense to me. But so there and tens or billions of enterprise value created for these businesses. It's incredible.
So I'm still like, maybe I'm kind of overfitting here, but I'm still trying to get my head around, how do you launch a stablecoin on a testnet of a chain that's not going to launch for a year? What the fuck is going on? Like, that doesn't make any sense to me. Testnets go down. Testnets go down. They lose blocks. Like, weird stuff happen. Like, what? Like,
Because obviously the whole traditional business and Rails are not actually being powered by the testnet at this point. we are in a transitional state, let's say, where we are exploring things and seeing if this is possible and pushing the limits on the evolution. And I don't know.
That's funny.
We'll see. I really don't understand what again, what, like, in order for this to be something that is a real unlock, right? There has to be some amount of like new value created or unlocked somewhere, and I'm not. That's the missing element for me. If you tell me what that is, okay, then I might be on board with this. But
hey, welcome to the world of narratives. This unlock. That's the big unlock. It's right partnership. And it's stable coins, right? Klarna's innovating. They're thinking ahead, right? So the AI agents can just use, Klarna seamlessly. And then that's going to add billions to their market cap. That is the great unlock.
You should do a promo video for them, Luca. that was very well delivered. I like that. I reckon they put a suit on you, get you on CNBC. I reckon we could add a couple of zeros to the Klarna market cap there. So speaking of testnets, Cardano. So there's I love trolling Charles. I can't help myself.
Yes.
Whenever anything Cardano comes up, I can't help myself. I'm supposed to be magnanimous about all chains. I have like a contractual obligation now to do that with Infinex, but there's some that I'm just like, I can't. So this, I love this because there's so much going on. There's like Charles on the timeline being insane. This, for whatever reason, so someone apparently vibe coded, or vibe coding was involved in this exploit or a chain halt thing where they targeted the consensus mechanism, and actually Charles's own proof of stake position, which is like the irony levels just keep going up and up and up. So the weird thing was, this happened, the chain went down. Nick Carter described the incident as someone vibe coding an exploit which brought down the entire Cardano blockchain. And then Charles said, so Charles is a founder of Cardano and erstwhile co-founder of Ethereum as well, maintains this characterization is false and undermines Cardano's decade of formal methods and high assurance engineering. But like, the chain went down, bro. I don't know what's like, is the issue that it was vibe coded, or like someone wrote code that took the chain down? Like, that very clearly seems to have happened, unless I'm mistaken here.
Before we even get there, I mean, Kain, maybe put a young buck on game. How does this even happen, right? How does this, like, because there's Dino coins, there's guys that are early, like how, because it to me, it's been ridiculous since I've been in the space since 2017, but I don't know the lore. And obviously he sold the whole Ethereum, that Ethereum co-founder badge, man, straight shot. If you didn't make billions on Ethereum, you made more billions on the other thing. Yeah. But like, how does this nonsense even stick for this long? You know, this just seemed to like be obvious that it's nonsense. So like, what's going on here? Tell me.
So I think I had a very interesting conversation with Robert Leshner, the founder of Compound, about a year ago, right? And he had this very interesting take of this thing, especially in the Ethereum community, that he calls chain racism, right? And basically it's like all of the OG chains that are kind of what we in Ethereum would call nonsense chains, right? Like chains that don't do anything, that they used to be called zombie chains, whatever. Like they don't produce blocks, or like there's no transactions in the blocks or whatever. And he was like, XRP actually works now. Like there's a whole thing, and you can do stuff with it. And I actually went and had a look at it. And I was like very surprised to find out that it does work. And I think for a while Cardano had this, it was like perennially unlaunched. It was like it's just about to launch, like just one more month of development, and then it kind of launched, and like a lot of chains didn't get much traction, but like it is live, which is why I think it going down is because someone did something with their consensus, caused a chain split. Yeah, I mean we had the balancer hack that we talked about last week, where there was some theory that like this hack was maybe augmented with like some AI coding tools. I don't know, Tay, like what are your thoughts on like AI taking down blockchains? Is AI going to kill all of our chains? What's the deal?
No. Unfortunately not. No, I mean, like specifically in the balancer situation, the story that was being told was that because the hacker left comments in the code, and the comments sort of like had a bit of a vibe code like aura around them, people were like, oh, the hack was vibe coded. I personally, I don't even think that the comments seemed like they were AI comments. I think they're human comments. I have no idea why the hacker left them in. That's unusual. But then the second story was all the AI companies who are trying to shill their product or service were like, we detected this. We would have spotted this. Balancer should have.
That was the worst.
And that's always the case. Like it is, you will always have this like vendor ambulance chasing thing. Right now, it's just so centered around AI. And because there's actual innovation happening in AI and things are actually being done, it's a bit harder to discern when the AI is actually being useful and when it's like just more vendor slop, right? And they're like, okay, if you would have detected it, like you probably should have done that, bro.
Why didn't you do something about it? Well, I think for context, one of the AI security vendors, right, was like, oh, this balancer hack is like so unfortunate. We told you guys about this. It's right here. And everyone was like, what are you talking about? You didn't tell us about. And they're like, yeah, okay. We didn't tell you about it. That's fine. Sure, that's not what happened. But we could have told you about it if we had known. And then it was like, what? Like, you could have told us about. But what are you saying right now?
But you didn't.
But like in theory, we may have, like in theory, our software could discover this hack. That's all we're saying.
We're just saying in theory we could have prevented it. And maybe we chose not to. We don't know. And then it was like the Homer like fading into the hedge. They just disappeared. Like delete your account and pretend like.
As they should have. By the way, I asked ChatGPT on day one of the drama. I like dumped a bunch of the tweets in and the reaction. I was like, what should I do? This is my company. What should I do? And ChatGPT was like, 72 hours, do not go on the internet. Isn't that for the Nexus?
That's its like crisis.
So I was like, and then it had a little rationale, but that was like its number one advice. It's like, let me break it down for you. And and then of course, for like 72 hours, they kept coming back on Twitter and trying to like defend their position.
No, I didn't get it. What we're saying is we couldn't have worked this out. It was the opposite of what we were saying. Yeah.
So I will say though that there is a whole portion of like vulnerabilities and of coding and like a whole spectrum of work that can be that can happen like way faster with AI. So you still have to have like everything in the right positions. You still have to have people. You still have to have all of this, right? But it can really like just make the turnaround time and the iteration time, like that feedback loop. Whereas, with a lot of technical things, historically, like you're sitting there alone looking at this code or like trying to figure out if there's something there. And like one of the techniques that you learn when you're doing this type of work is to like talk to yourself, or like go for a walk and talk to yourself, or like pick up the phone and talk to someone else. The AI almost channels that in like a way more efficient way, and also in a way that vibes with asocial engineers a lot better.
Just having a conversation, being like, hey, show me this thing. Like, what do you think about this? Right.
Mm-hmm. And so that's I think what, like with this bug, or with this thing that happened, right? It's not that the AI like went out on its own and like figured it out and then broke Cardano. It's like this guy that had like deep expertise and deep experience and understood the ecosystem and had all this stuff, like was able to successfully execute this thing, like actually do so with the help of AI in various parts of the process. I think also one of the reasons he's saying this so loudly, that he was like saying like, yeah, AI was part of this, is because part of the base of his claim is that he didn't really realize that it was actually going to break all of Cardano.
Which there was a vibe of like DevOps 199.
Yes,
in this,
it was
a little bit,
100%.
right? So there's this story from like, I guess it's 2018 that this happened, if I'm not mistaken, where there were maybe even 2017.
I think it was 2017.
Yeah, 2017. We had multi-sig wallets, right? There was this multi-sig wallet that had been built by Parity, and basically this is kind of similar to the MegaETH thing, right? Like you have three people who sign a transaction and then someone executes it and it's sent on chain. But the way that the Parity, and jump in here, Tay, but the way that the Parity hack happened, or freeze effectively, is this guy was just playing around, submitting transactions, like testing stuff out, and basically bricked all of the wallets with like hundreds of thousands of ETH in them. Like every single Parity wallet got bricked.
Yeah. And then he goes into the GitHub and he goes, oh God, I'm going to mess up the quote, but I think he goes like, I accidentally killed it. And that was like,
the smiley face of like, did I? Yeah.
And then of course the Gitter, because back in the day, all the GitHub conversations were like mapped to the Gitter channels. So then everyone on Gitter was like, oh my God, he actually killed it. And it was a big debate. There was like a lot of, it's still to this day not 100% certain how knowledgeable the actor was, but it doesn't really matter if it was, it matters to a certain extent, but like for the Parity multi-sig wallet to be in that position in the first place was a big problem. In the same way that Cardano being in this position in the first place is a big problem. The fact that it's even slightly plausible that someone did something truly accidentally is a problem. Like your system should not
accidentally take down chains. Yeah.
And then I think it's a separate conversation if we want to talk about the people behind these and their intent. That's a separate conversation. But in terms of like lessons learned for big protocols and things that hold money, yeah, we should avoid people accidentally killing our things. Yes.
That should be definitely one of our primary things to avoid. All right. So next topic, Berachain. It feels like we're just talking about chains. It's chains all the way down here. All the chains have been getting
protocols do some stuff.
Yeah. So Berachain gave a $25 million refund right to Brevan Howard, to Brevan Howard's fund. So Nova Digital, they got this refund clause on their Series B investment, letting it reclaim cash post TG. And if I'm not mistaken, it goes for a year. They had this 1 year clause of post TG refund. I'm not sure exactly how this works, if the strike price, tenor of it or whatever, but
I don't think I've seen this before, but I can Remember?
Okay, that was my question because
Pretty weird.
There's two different sides to the conversation that is happening on Twitter right now. The first is whether or not this clause is legal, is fair, should there be any transparency, et cetera, et cetera, et cetera. And then the other part of the conversation is like, which isn't really, there's like a bit of speculation, but I wasn't able to find anything really hard on it. Like, are these types of side deals in series rounds normal? Because when I raised my rounds, that was definitely not a thing that I didn't like. There were no special terms given.
If anyone wants to take my money under those terms, just ping me. I'll give you my money. I will say, I actually want to chime in on this one. Wow, I feel bad for Smokey because I think he's incredibly bright. I don't know if you've ever interacted with him, Kain.
Yeah, no, I love Smokey. He's a good guy.
He's a super good dude. So, and he's gotten some bad beats. Bad beats obviously, turn people into savages. So hopefully he turns it around and he takes them on the chin and comes back bigger and stronger. I'm rooting for him to do that because I think he deserves it. One of the only people I've ever been on a panel with, and I listen to him, I'm like, oh, finally, there's like a dude that's like really, that I'm like impressed by listening to. Usually most of the time you sit on these stages and there's like, it's horrible conversations. Smokey's one of the few where I'm like, I'm on a panel with Smokey. I'm super happy because I know we're going to have a good convo. So I think he's incredibly bright. And then on the Brevan Howard side, I mean, if you can pull it off, pull it off. I mean, at the end of the day, their fiduciary responsibility is not to anybody that they're investing in. Their fiduciary responsibility is stay within the legal guidelines and return capital to Brevan and Howard, and yeah, it's a shark of a deal. Well, shark, you can pull it off. I'd do that deal any day of the week. Anybody wants to ring me for some money.
Right.
Who we check in on here? Kyle from Multicoin.
Because I reckon he's had a rough 24 hours going, wait a second, you're telling me that I could have been forcing people to give me refund rights? Like Brevan Howard comes in and they're like, no. We're gonna cook something really special.
But there's a couple guys, Brevan Howard being one of them, Kyle probably also being another, that could yield that if they wanted to. Right? Like I do think there's some reputational blowback, right? Like obviously some people look at that strange, but to be frank, this is business. And if you can do a good deal, Kyle could do the, Kyle probably actually in the last 24 himself. He's like, that's a guy who could do deals like that if you wanted to, just because of his cachet and what he's been able to, at least in the eyes of a lot of people. Yeah.
Okay, but are the other investors in the round
I'd be furious.
allow like that? But don't have. I mean, these it's an agreement, right? You have agreements around the plus, and then most of the agreements,
$50 million. I'd be livid, dude.
Okay, so like when we did our Series A, right? Like there were terms in the Series A that were clearly like it was boilerplate language, but it was like there were clearly terms that was one, making sure that if I did anything funky with anyone else, they knew about it.
Yeah.
And then also terms that said like if something came up where I made a future offer to basically anyone under any terms, I would have to extend that same
first right of refusal. Yeah, all that stuff. Exactly.
Right. And and the reason for that, in my understanding, is so that it's like a forcing function. So that you can't, and it makes the whole process more efficient because if every single investor in a round has to basically be like running around making sure they're getting the best possible deal, deals don't get done. Yeah. Whereas if you're like, look, okay, we all agree this is the deal as long as we know all the information that's on the table, like, and if you're going to, if something happens and you somehow end up in a situation where you're giving someone special terms, like you have to make the offer to me. And that's like such broad coverage. I don't understand how none of the other investors in the round had those terms, which would then make the offer, like the special terms given to Brevan Howard, at least have to be disclosed, right?
Yeah, exactly. At least. So look, I don't want to sound too crazy here, but what if we had a system that was transparent and we could put a contract like this on some kind of a chain so that everyone could see it, and there was no way that literally meat space law is like so adversarial, right? And the whole point of smart contracts is like, here's the contract, it does the same thing for everyone, put your money in, you can inspect it, and hopefully it doesn't lose everyone's money. But aside from that, like you put your money in, the terms are clear, it's transparent, everyone can see it. Like there is very much an argument for like, do an ICO, bro, and everyone can see the deal. Like when you're doing, you know, these equity deals, side deals, weird stuff, like at the end of the day, you can't really stop anyone from doing anything. Like it's the law, right? Like that, the only recourse is like go and I'm sure that some of the other investors are like, well, let's go get some lawyers and sue these guys. You know, but then it's a whole thing. It's a whole, like now you're in this whole, you're suing like a founder.
That's really bad.
Yeah, it's really bad. So
yeah. And that's why I'm just shocked that, I don't know. I think there were like a couple lawyers on the feed who are like, and even the ones that commented in the story were like, they kept prefacing, assuming that we know everything, assuming that this is like the full collection, right? This is weird, etc. I'm in that same boat still. What, like, how did, you know, these are all people who are pretty sophisticated. We're not like the other investors in the round aren't retail, right? How did this happen?
I'll tell you exactly how this happens, right? This is founder psychosis. And again, I don't know anything about this, right? But someone comes to me and says, hey, I'm going to give you 25 mil, but all I want is this refund right in case the price goes below $1. And as a founder, you're like, well, that'll never happen. So this is fine. This will never be a problem. The end. And then you write the thing. You're like, whatever I need to do. Sure. And then 2 years later, you're like, oh, okay, fuck. This is bad. Like founders do crazy stuff. And they're like, this is just, it's like a little, it's not, you know, there's a fine line. Matt Levine talks about this all the time, right? There's a fine line in founder land between like crime and, you know, just like irrational exuberance, right? Like the line is very gray. And it's like, no, like this is fine. Like I just need to do this. These guys are asking me for this unreasonable thing, but it's never going to happen. So it's fine.
And I think I can empathize and put myself in his shoes and like tell myself that story and be like, yeah, we got it. Right. Like I can see that one thought. Like I can understand it. Like the way that you just framed that, I could be like, yeah, like, yeah, we just raised at 1.5. What do you mean?
It's crazy. Like as if it's going to be 200. Like this is not a real, this almost isn't even real.
Poor Smokey. I hope this is the bottom. I really do. That's a talent. That's one of those talents you don't want being like pushed away and do it like, you know, you don't want that.
I mean, I'm really hoping that there's some piece that's missing to the story that gives a little bit, like that explains how this all happened. Because by the way, Luca, even if you did that, right, your lawyer would then be like, yo, Luca, you can't do that. Right? Like you have responsibilities and agreements.
You can say no to lawyers. You can say thanks for the advice. Like a lawyer will be like, this is my advice. And you can be like, cool, but like, I don't care.
My lawyers are too aligned. They'll quit. My lawyers are on my cap table, right? So lawyers will be like, we're not going to jail for you, man. It's not happening. We got yeah. Line your lawyers with some equity so that they can, you know, so you guys can fight. That feels I don't know.
I think, I mean, it ultimately comes down to like whether they're right. If he had terms with other investors that he did have to disclose or extend those special terms, then I feel like we're firmly in territory where you're literally like,
look, maybe I'm going to be honest. The more I stay in this space, the more that I realize that the majority of venture investors are really just retail with a large check size. Like a lot of you guys are not the brightest. So, you know, maybe it did just get away from everybody. And that's like one of those areas in there's probably one of those stipulations, like first right to refusal. It's probably one of those things you have a conversation on and you know, one VC is talking to one guy and they're just like, yeah, screw that. You know, he's leading, you know, this not being a legal thing and, you know, this being carved out. And then one guy coming in with a $50 million check being like, I'm leading, him figuring out those terms with Smokey. Then Brevan and Howard piling in, you know, I can see that happening, right?
You can imagine the bright VCs being like, sure, give him like, okay, talk about a founder being like, this is fine, it's not going to happen, right? You can even easilier imagine a VC being like, yeah, Isabel, like, that's never going to, like, give him whatever. Here, Brevan and Howard wants to join the deal? Yeah, screw that clause.
Let's just get more names a part of this. We want some more big names. Get some more big names involved.
All right, I see. Thank you for the reality check, guys. I appreciate this.
Yeah. Everyone involved is like, this is fine. This is fine.
Also, like, I don't know exactly the timeline, but like it was like once if you're in like 2023, 2024, even 2025, 2026 is so far away. Like we'll cross that bridge when we get there.
Like,
so
it may not even happen. We may not get to 2026. Like, it's like not even a real time. So I think that is pretty good for this week. I think we can probably wrap it up if you guys are okay with that. So that's it.
Mm-hmm.
Good episode. A lot of stuff. Let's hope we have some more chains doing crazy stuff this week. Seems like all the chains are doing crazy stuff, so I'm here for it.
So thanks for tuning in. If you like this episode, follow us on the Unchained feed on X, YouTube, or wherever you get your podcasts, and we'll see you next week.